let's talk about the world of IPO. We do have a new IPO which will be opening on the 6th of May to the 8th of May, and that is Indegene. And we'll talk about what's happening in the company, where are the funds going to be used, what are they keeping on their anvil. And in the studios today, we're joined by the management of the company. We do have Mr. Manish Gupta, Chairman and CEO of the company, joining in with us, as well as Dr. Sanjay Suresh Parikh, the Executive Director and Executive Vice President at the company. Good morning, and thank you so much, gentlemen, for coming to the studio. And it's a pleasure talking to both of you all today. So, I just want to start by just talking about the basics in terms of the business model of the company. If you could help our viewers understand the business model, what is the strategy of the company, Mr. Sanjay?
Sure. So essentially, we came together about 25 years ago, and with the whole idea that we would want to bring deep healthcare and medical expertise together with deep technology expertise as well. Continue to invest in these two capabilities. Both healthcare as well as technology have evolved the years, but we basically continued to stay ahead of the curve on both of these and try and basically bring these two together to bring services and solutions to the global life sciences industry to help them become future ready. And over the course of the years, we've basically continued to invest in that, and today have acquired a position where we are considered to be one of the most trusted, shall we say, digital-first commercialization partners to the global life sciences industry. 20 of the top 20 pharmaceutical companies in the world actually work with us, or we work with them, essentially. We have 5,200 employees across the world. We have more than 20% of those with a medical and pharmaceutical background. And today what we do is we help them in their entire commercialization life cycle, which includes clinical development and clinical trials, regulatory affairs, medical affairs, as well as sales and marketing and pharmacovigilance and safety. And all of these are done in a manner which is both expertise driven as well as enabled with modern technology, which includes a lot of the AI, machine learning and Gen AI.
Right. Very good morning, gentlemen. Thank you so much for joining us on ET Now. And I just wanted to understand the fact that you're coming out with the IPO right now. How do you plan to actually go ahead and deploy the fresh funds that you're planning to raise via the IPO?
Sure. First of all, again, thank you so much for inviting us to this show. Before I answer that question, let me just talk to you about a bit of an industry, right? The life science industry is a very large industry, and by life science we mean pharmaceutical companies, medical device companies, and emerging biotech companies. It's a very complex industry, highly regulated industry, very specialized industry. What we as Indegene have been able to do very well is that while most of our growth has been organic in nature, we have also been able to acquire very specialized capabilities, things like market access and pricing, right? Brand strategy, and bunch of things like that, through tuck-in capability acquisitions. First, one of those acquisitions we did in 2022, we had raised debt of approximately 400 crores. A part of the fresh proceeds which are going to be raised in the company are going to be used to pay off this debt. Close to 390 crores are going to be, 760 is the total raised into the company. 390 goes into this, 103 or so goes into CapEx for the next few years. And the remaining is general and corporate purposes, which we'll again use mostly for M&A.
Sure. Mr. Gupta, I just was looking at some bit of the numbers which are reported in the RHP, right? FY21 to FY23, while the revenues have seen a very, very strong growth, like over the last 2 years.
Sure.
Margins have seen a bit of a change and a decline there. So is that something that, in terms of the change that we're seeing for the margins, revenue is managing to grow, but what is the mix that is changing that is impacting the revenues?
First of all, margins, I won't say have declined. If you see our margins, FY21, I'll discount, it was a slightly different year. It was a COVID year, no travel. Plus we got some software export incentives, 4 years clubbed into one. We are a very conservative company as far as any governance processes are concerned, right? So there were software export incentives which we did not recognize, right? And they came in 4 years in 1 year. So that bumped up the EBITDA margins. If you see 2022, our EBITDA margins were 18.7, and they were low than what typically we have, on the back of very significant growth. We grew the company that year by more than 70%, right? And on the back of it, EBITDA margins dipped because we subcontracted a lot of stuff. 23, EBITDA margins from this 18.7 grew to almost 20%, And if you see our numbers for 9 months, December 23, they are back to that 21.9%. At an EBITDA level, the reason you see some bit of variability is, first of all, we have this debt, which I spoke about, right, which will go away. After this IPO, we become a debt-free company, and hence the interest costs goes away from the from our P&L. And in FY22 in particular, we had some old acquisition-related payouts, which the way the deal was structured came as a one-time thing, hit our P&L. Right, so it was a completely one-off thing related to an older acquisition.
So, this finance cost, how much would that be adding to the, in terms of the basis point to the margins going forward, given that now it's going to go off? So, how much would be the benefit? That's it.
So it's going to be in the region of, if you think about it, we think about if let's say you're doing 22% PAT, right? Typically our 22% EBITDA, then our PAT margins are typically in the region of 14.5-15%, right? So they will trend in that direction.
Right. You touched upon the acquisitions that you've done, and if you look at the company so far, they've done approximately 13 acquisitions or so. If you could tell us what is the criteria that you consider when you do acquisition, how have they aided the company going ahead, and any more in the pipeline that you are envisaging?
So our focus on acquisitions really is not about trying to drive bulking up of revenues and growth. It's primarily to acquire very specific and nuanced capabilities. As I mentioned earlier, we are a digital-first commercialization partner, which actually straddles a very large continuum of pharma commercialization, from clinical development all the way to market. So in those, there are various capabilities, and if we see companies or we're looking for specific complementary capabilities, those are the things that we actually focus on in terms of acquisitions. In fact, that has been our strategy throughout, and we will continue to pursue that as well.
Okay, and just want to know, in terms of given that you've provided a lot of multiple service like contract research, contract sales, BPO, etc., what's the competitive intensity that you see in this, Mr. Suresh?
So we are very unique in that sense, and Manish, I don't know if you want to take that, but
yeah. So first of all, I want to correct you over there that we don't provide these services, right? What we provide as services is combining deep medical expertise and technology tools and platforms which we have developed to enable pharma companies to do what we'll call digital for sales and marketing, right? Submissions, regulatory submissions, or managing pharmacovigilance safety processes using medical expertise and technology platforms, right? I can go on and on. Same thing, we are on clinical trials. Now, we are a very unique company, right? There is nobody like us existing, I would say, globally, and definitely not in the Indian market. But this is a very large market with huge spends. In that, we see multiple type of players trying to play. There are life science specialists, most of them based out of the United States or Europe. They play in this. There are contract research organizations who again have, or clinical research organizations who have expertise in these areas. There are contract sales organizations. These are archetypes of companies which try to play in this space. And then, of course, some of the IT companies as well as try to play in this space.
Right. So you will be boasting of a huge clientele domestically as well as, do you all also cater to international clients as well?
Actually, if you see our revenues, and by the way, let me just give you an explanation of how the industry works. If you see the spends in this industry, close to $200 billion, which is north of 156 now, stated to be to more than 200 by 2026. Spends in the areas we operate in, 65% of that is in the United States. 66% of our business comes from the US, pretty much mirroring that. 25% of these spends are in Europe. 30% of our business comes from Europe. The remaining 4% of the business outside of the 66 and 30 is spread between China, Japan, and India. And by the way, we have presence in all these geographies. We have 17 offices across the world.
Okay, that's a lot of insight that we have on the company. Surely watching out for the IPO, gentlemen. And thank you so much, for joining in with us on the studio today and talking to us about the company. We'll join you all on the listing day as well, hopefully. So thank you so much, gentlemen.
Thank you so much for inviting us.
Thank you so much.
Thank you.
If you like this video, then like, share and subscribe to ET Now.